Now coming to one question related to trading account, which we have already discussed. Okay, in trading account, what we calculate? We will calculate gross profit or gross loss. Okay, gross profit is equal to net sales minus cost of goods sold. If net sales exceed the cost of goods sold, then it's a gross profit. Vice versa, if cost of goods sold exceed the net sales, then it's a gross loss. This we have discussed. Now we will prepare the trading account to know the gross profit or gross loss from this question. So question is, prepare trading account from the following particular for the year ended 31st March 2020. In one side of this particular, in the left hand side, opening stock, purchase, sales, wages, carriage inward, carriage outward, manufacturing expenses, and in the left side of this format, purchase return, sales return, gas, fuel and power, dock charges, factory lighting and office lighting. In additional information, it has given that the closing stock is valued at rupees 6 lakhs. Now we will prepare the trading account. Trading account start with what? Start with the opening stock. If the in question opening stock is mentioned, then we will start with the opening stock. In the left hand side of this format, opening stock is given. So opening stock we will write this side. This is the stock at the first day of the financial year. So we will write opening stock. Opening stock is 2,50,000. This format is clear. In the books of, you have to write the name of the firm. Trading account for the year ended 31st March 2020. For the year ended 31st March 2020. And you draw the format in T shape. One side is debit and another side, your right hand side, is your credit. Left hand side debit, right hand side your credit. Debit side we write the expenses and credit side we write the income. So start with the opening stock. Thereafter the purchase is given. When you see the purchase, then you see whether the purchase return is there or not. So purchase return is also given in the question. So you write the purchase, to purchase in the inner column, to purchase. Purchase is 7 lakhs. You write this one in the inner column and then you deduct purchase return. Purchase return is purchase return. You deduct the purchase return. Purchase return is how much? It is 22,000. Purchase return is 22,000. Purchase return 22,000. Okay. So deduct the purchase return from the purchase. So difference will indicate that after deduction the amount will indicate net purchase. So 0,00876. 6,78,000 is the net purchase. Purchase less purchase return. Then you see the next information, sales. We write the sales this side, credit side. It's an income, it's a direct income. So write the sales. Before writing the sales, you see the sales return is there or not in the question. So sales return is also given in the question. So you write the sales in the inner column. 18 lakhs is the sales. Sales is how much? It is 18 lakhs. You deduct sales return from this, less sales return. You deduct the sales returns. So sales returns is how much? Sales return is 36,000 is the sales return. So deduct the sales return from sales to know the net sales. So after deduction, the figure is 0,004,671. 17 lakh 64,000 is the net sales. Sales less sales return indicate what? It's a net sales. Thereafter you come to the left hand side of the format, wages. Wages is direct expense, you know it. Wages and salary, productive wages, these are direct expenses. So in trading account we write the direct expense. So wages is 2,06,000 is the wages. 2,06,000 is wages. So we have written the 2,06,000 wages. Carries inward is also a direct expense. In trading account we write the direct expenses. So carries inward is direct expense. Carries inward. Okay. Carries inward is 34,000. Carries inward, freight. Okay. Freight inward or only freight is a direct expense. Next is carries outward. Carries outward means carries on sales. Carries on sales is indirect expenses. Carries outward is indirect. Carries outward means carries on sales. It's a indirect expenses. Carries on sales comes under the selling and distribution expenses. And carries inward means carries on purchase. At the time of purchase of goods, when we pay the carriage, that is called carriage inward. So carriage inward is direct expense and carriage outward means carriage on sales is indirect expense. This will be shown in the profit and loss account, carriage outward. Next is manufacturing expenses is the direct expense. Manufacturing expenses is a direct expenses. Manufacturing expenses. It's a direct expenses. Manufacturing expense. How much it is? Manufacturing expense is 2,48,000. 2,48,000 is the manufacturing expenses. This is direct expense. Next, coming to the right hand side of the format, we have done the treatment of purchase return, sales return. Thereafter, gas, fuel and power. It's also a direct expense. Gas, fuel and power. It's a direct expense. Gas, fuel and power. It's a direct expense. It is 75,000. Gas, fuel and power, 75,000. Thereafter, dock charges. Only it has written dock charges. So here I assume that dock charges is related to import of goods. When we have imported the goods and we pay the amount in clearance from the dock, that is called dock charges. Dock charges is a direct expense. But if the same dock charges when we pay at the time of export of goods, then it's a indirect expense. So here only dock charges is written. It means I am considering it's a direct expense. It is related to dock charges related to import of goods. So this one is dock charges is 8,000 is the dock charges. 8,000 is the dock charges. Thereafter you see factory lighting. Factory lighting is also a direct expense. Factory lighting is direct expense. Factory lighting. What's the amount of factory lighting? It is 96,000 is the factory lighting is 96,000. Factory lighting is 96,000. Okay. Factory lighting 96,000. Thereafter office lighting. Office lighting is indirect expense because it is related to the office and administrative. It's a indirect expense, so this will be reflected in the profit and loss account. In trading account, factory lighting will be in the trading account because that is a direct expense. So office lighting will be in the profit and loss account. Next is closing stock, which is valued. Closing stock, credit side we will write it closing stock. Closing stock in the credit side. Closing stock is how much? It is 6 lakhs is the closing stock. 6 lakhs is the closing stock. 6 lakhs. So we have written all these information in the trading account. In trading account, in debit side, what we write? We write the direct expenses. Purchase and direct, all direct expense. In credit side, what we'll write? We write the direct income of the business, that is sales. Opening stock, what we have written in the debit side, and closing stock, what we have written in the credit side, these are not expense and income. This is not the opening stock is expense and closing stock is income. No, opening stock and closing stock is not expense and income. It is written in the debit side opening and closing stock credit side to find out the cost of goods sold. The goods which was sold, what was the cost of that? For that reason, we write the opening stock in debit and closing stock in credit. You know the formula of cost of goods sold: opening stock plus net purchase plus all direct expenses minus closing stock. So opening stock plus purchase plus direct expenses minus closing stock, this will indicate the cost of goods sold. That's why opening stock in debit I have written and closing stock I have written credit side. This is not the expense and this is not the income. This is written in the debit and credit because of to find out the cost of goods sold through trading account. So now we'll see which side total is more. Now we'll see which side total is more, debit or credit. So when I'm saying roughly, it is 23 lakhs around. Here is 8, 9, 10, 11, 12. So this side total is more. This side total is, credit side total is 0, 0, 0, 4, 6, 3, 2. 23 lakh 64,000 is the total. Write the same total in the debit side. Thereafter we will find out the difference. 23 lakh 64,000 is the total. 23 lakh 64,000. Now we'll find out the gross profit. So what we'll do? We'll do the total of this first over here. I'm going to do the total and thereafter we'll find out the difference. Okay, this is one way. So when I'm doing the total, or you can directly write the gross profit over here. So I'm going to directly write the gross profit to gross profit. What we'll write? Gross profit. This will be transferred to which account? Profit and loss account. Profit and loss account. Gross profit will be transferred to which account? Profit and loss account. Now we'll see the difference. 0, 0, 0, 1, 0, tens, again 0, 100, 0. Okay, next you come in 1000, 8 and 6, 14, 18, 18 and 8, 26, 26, 31, 26, 31, 39, 39, 45, 45 and 9. 45 and 9, 54. Okay, 54, 5 carry. 5 or 5, 10, 17, 18, 19, 20, 24, 31, 31 and 9, 40, 40 plus 6, 46, 4 carry. So 4 carry, 4 or 2, 6, 6 and 6, 12, 13, 14, 15, 16, 16 plus 7. 16 plus 7, okay, 23. So profit is 7,69,000. Okay, the profit is 7,69,000 is the gross profit. This will be transferred to profit and loss account. Is it clear? Okay, 7,69,000 is the difference amount. This is the difference. Credit, total of credit minus total of debit. This indicate the gross profit. Okay, this gross profit transferred to profit and loss account, 7,69,000. Now coming to the next question based on trading account. Here also we will find out the gross profit, but information is given in a different way. So see the question. From the following information, prepare trading account for the year ended 31st March 2020. So you again draw the format in the books of trading account for the year ended 31st March 2020. So this side is your debit and right hand side is your credit. Left side debit and right hand side credit. Particular amount in rupees, particular and amount in rupees. This side will write the income, this side will write the expense. Which type of expense? Direct expense, purchase and direct expense. This side your direct income means sales and closing stock, and start with the opening stock. Okay, so the information given: adjusted purchase 15 lakhs, sales 21,40,000, return inward. Return inward means it's a sales return. Return inward is also known as sales return. Freight and packing 15,000. Freight and packing. Okay. Packing expense on sales. Packing expense on sales, it's related to selling and distribution expense. It is indirect expense. This will be reflected in the profit and loss account. Depreciation 36,000, factory expense 60,000, closing stock 1,20,000. 1,20,000. Okay. So coming to the what is adjusted purchase? You know, adjusted purchase means, what is adjusted purchase? Adjusted purchase, you must have to know about this. Adjusted purchase means opening stock plus net purchase okay, opening stock plus net purchase total less minus closing stock you deduct it. So this figure will be this figure is called adjusted purchase. This figure is called adjusted purchase, this one. So opening stock plus net purchase means purchase less purchase return, minus closing stock will indicate adjusted purchase. So if the information of adjusted purchase is given, it means opening stock and closing stock is already adjusted. So you write directly adjusted purchase in the debit side, adjusted purchase in the debit side, directly you write it. This indicate what? Opening stock plus net purchase minus closing stock. So adjusted purchase in the question is 15 lakhs is the adjusted purchase, 15 lakhs. What is this? Opening stock plus net purchase minus closing stock. It means we are not going to write the opening stock this side and closing stock this side. We are not going to write because it is already adjusted. Next is sales. So we have to write the sales in the credit side by sales. By sales. Return inward. What is this? Return inward means sales return. So we'll deduct from it. So sales is, you write the sales figure in the inner column, 21,40,000 is sales. Less you deduct return inward. Return inward is what? Return inward means sales return. Sales return. Return outward means purchase return. So here it is given return inwards is how much? Return inward is 40,000. So we will deduct the return outward from the sales, then we will get the net sales. Net sales, it means it is now 21 lakh is the net sales. Sales minus sales return. Thereafter, freight and packing. Freight and packing. So we have to write it freight. Freight and packing is a direct expense. Freight. Freight and packing. FREIGST. Freight and packing. It's a direct expenses. This is done at the time of purchase of goods. Freight and packing, okay, is 15,000. It is 15,000. Next item is packing on sales. Packing on sales means it is related to selling and distribution expenses. It's an indirect expenses. So this will be reflected or this will be shown in the profit and loss account, not in trading account. In trading account only direct expenses. So packing on sales is related to selling and distribution expenses. That's why it will be, this will be reflected in the profit and loss account. Next is depreciation. Depreciation is also a indirect expense. Next is factory expense. Of course, we'll write the factory expense. Factory expense is the direct expense. Factory expenses. So factory expenses is, how much factory expenses is? 60,000 is the factory expense. So you write the factory expense. Thereafter, closing stock. Closing stock is already we have deducted while calculating the adjusted purchase. So we are not going to write the closing stock this side because already it is deducted to know the adjusted purchase what I have written in the debit side. Information of adjusted purchase is given. It means we are not going to write the opening stock and closing stock in the credit side because these two items are already adjusted. Opening plus net purchase minus closing stock. Okay. Now see the difference, which side total is more and which side total is less. Credit side total is more, so you write the total first of the credit side, it is 21 lakh. Write it in the debit side, the same total 21 lakh. Okay, 21 lakh. Then you find out the gross profit through the difference figure, balancing figure. Gross profit transfer to which account? Profit and loss account. Gross profit transferred to profit and loss account. So this is through the balancing figure. This will be transferred to profit and loss account through which figure? Through balancing figure, profit and loss account. So difference amount is 0, 0, 0, 5 and 5, 10, 0, 1 carry, 7 and 1, 8, 8 or 2, 10, 8 or 2, 10, 1 carry, 5 or 1, 6, 6 and 5, 11, 1, 1 carry, 1 and 1, 2. So 5,25,000 is the gross profit which is transferred to, gross profit transferred to profit and loss account. This is the difference amount. Credit is more and total of the debit, this 3 item total is less. This figure is high and total of this is less. So difference indicate the gross profit. If this side will be more and this side will be less, then gross loss transferred to profit and loss account. Okay. Now coming to the next question, based on trading account. Based on trading account. So question is, calculate gross profit from the following informations. First one is closing stock is given in the question, right? Wages, salary, sales and adjusted purchase. Adjusted purchase means what? Opening stock plus net purchase minus closing stock is called adjusted purchase. This figure is called adjusted purchase. So when adjusted purchase is given, then we are not going to write the opening stock and closing stock this side. We are not going to write opening stock, we will not going to write, and closing stock we are not going to write, because already it is adjusted. Opening is added to purchase and closing stock is deducted from the total. So you write debit side to adjusted purchase, to adjusted purchase. Adjusted purchase given in the question is how much? It is given 5,50,000. Well, closing stock we are not going to write the closing stock. Why we are not going to write the closing stock in the credit side of trading account? Because it is already deducted while calculating the adjusted purchase. So next is wages. You write the wages in the debit side. It's a direct expense. Wages is how much? It is 40,000 is the wages. So write the wages in the debit side. Next is salary. Salary is indirect expenses. Salary means it's an office salary. It's an indirect expenses. So that will be reflected in the profit and loss account. Next is sales. So we'll write the sales this side by sales. Sales is how much? Sales is 6,88,000 is the sales. 6,88,000 is the sales. There is no sales return. So you can directly write it. So only 5 informations are there. Now you do the total. This side total is 6,88,000. Credit side total. And difference will indicate 6,88,000. Difference will indicate what? Difference will indicate the gross profit. Gross profit. And this will be transferred where? Gross profit transferred to profit and loss account, profit and loss account. So difference is what? 0, 0, 0, 8, 0, 0, 0, 8, 5 or 4, 9, 9 and 9, 18, 1. So it is 98,000 is the gross profit. Gross profit, and this will be transferred to profit and loss account. Is it clear? Now coming to the next question. Calculate cost of goods sold from the following information. Cost of goods sold. Informations are opening stock, net purchase, net sales, wages and salary, rent paid and closing stock. You know the formula of cost of goods sold. Cost of goods sold is equal to cost of goods sold is equal to what? Opening stock plus net purchase. Net purchase is directly given in the question. Net purchase means purchase less purchase return. So net purchase plus direct expense. What are the direct expenses given over here? Wages and salary is the direct expense. Wages and salary. It's a direct expense. Wages and salaries. It's a direct expense. Okay. Rent paid is not a direct expense. It's a indirect expense. Considering it, it's a office rent. Unless it is mentioned, it is a factory rent. Factory rent will be treated as a direct expense. If only rent is mentioned, then it's an indirect expense. It means it's a office rent. Minus closing stock. Minus what? Minus closing stock. So cost of goods sold is equal to opening stock plus net purchase plus all direct expenses. Indirect expenses in this question only wages and salary is given. Minus closing stock. Minus closing stock. Now you do the additions. See the opening stock is how much? Opening stock in this question is 40,000 is the opening stock. Okay. Net purchase is 50,000 is the net purchase. 50,000 is net purchase. Wages and salary is 10,000 is the wages and salary is 10,000. Net purchase is 50, opening stock is 40, wages and salary is 10 and closing stock is 15. You deduct the 15,000. So 40 plus 50, 90 plus 10, 1 lakh minus 15,000. So it is 85,000 is your cost of goods sold is 85,000. This is in rupees. 85,000 is the cost of goods sold. Now come to the next question, short question. A certain cost of goods sold and gross profit from the following. So informations are opening stock, purchase, direct expense, indirect expense, closing stock, sales, sales return. Okay, so first of all we will calculate the cost of goods sold. cost of goods sold is equal to cost of goods sold is equal to opening stock given in the question, opening stock plus purchase. There is no purchase return, so purchase plus direct expense. Here the direct expense, directly given direct expense, you write the direct expenses. Indirect expense will be in the profit and loss account, minus closing stock. Minus what? Closing stock. So opening stock plus purchase plus direct expense minus closing stock. So opening stock in this question is 32,000. Opening stock plus purchase, this is 2,80,000. 80,000 is the purchase, 2,80,000 plus direct expense 20,000 and closing stock is 50,000 is the closing stock. So 2,80,000 plus 20, it is 3,32,000. 3,32,000 minus 50,000. So cost of goods sold is 2,82,000 is cost of goods sold. 2,82,000 is the cost of goods sold expressed in rupees. Next is we have to calculate in this question gross profit. Gross profit means net sales minus cost of goods sold. This is called cost of goods sold. This is what? Cost of goods sold. Net sales means sales minus sales return. So here sales is given. Net sales means what? Sales minus sales return. Sales return is also given in the question. Sales return. This is also called return inward. So sales is 4 lakhs and sales return is 8,000. So it is 3,92,000 is net sales. 3,92,000. So you write 3,92,000 minus cost of goods sold. It is 2,82,000 is the cost of goods sold. 2,82,000. So difference is 1,10,000 is gross profit. 1,10,000 is gross profit expressed in terms of rupees. This is net sales in rupees. All the figures reflecting over here are in rupees. So cost of goods sold is 2,82,000, gross profit is 1,10,000, net sales is 3,92,000. Now see the next question. Calculate gross profit on the basis of following information. Purchase, return outward means it's a purchase return, carries inwards direct expense, carries outward indirect expenses. This will be shown in the profit and loss account. Carries outward wages, direct expense. Thereafter one additional information is given. 3/4 of the goods are sold for rupees 6 lakhs. We have to calculate what? We have to calculate the gross profit. So we'll add all expenses first. Net purchase means what? Net purchase means purchase minus purchase return, means return outward. So net purchase is how much? Purchase minus return outward. Purchase is 6,80,000 and return outward is 30,000. So net purchase is 6,50,000 is the net purchase. Okay, this is the net purchase. Now we'll calculate all expenses, direct expenses. Net purchase $6,50,000 plus direct expense, your carriage inward. Carriage inward is your direct expense. Carriage inward is 20,000. Carriage outward is indirect expenses. This will be shown in the profit and loss account. So this is the useless information for calculating gross profit. Plus wages is the direct expenses. Wages is 50,000 is the wage. So total direct expenses related to trading account is 7,20,000. Here it is given 3/4 of the goods are sold. So 3/4 is the cost of goods sold. So cost of goods sold is equal to 7,20,000. This is the total cost into 3/4. 3/4 is sold. So we'll calculate 3/4 of 7,20,000. So 3/4 of 7,20,000 is 5,40,000. 5,40,000 is the cost of goods sold. So gross profit is equal to GP is equal to net sales. Sales is given. Sales is sales minus cost of goods sold. Sales is 6 lakhs, which is given. 3/4 goods are sold for rupees 6 lakhs. So sales is 6 lakhs. Cost of goods sold is 5,40,000. It means GP is 60,000 is the gross profit. Gross profit is 60,000 is the gross profit. Okay. Another short questions. Calculate closing stock from the following. Calculate closing stock from the following. So informations are opening stock, purchase, return outward, freight inward, sales, return inwards, and gross loss. Gross loss. So cost of goods sold, we can calculate the cost of goods sold is equal to net sales minus plus gross loss. Cost of goods sold, net sales plus gross loss. You remember in trading account, credit side we write the net sales, and gross loss, which side we write the in trading account? Credit side. Okay. So cost of goods sold means opening stock plus net purchase plus direct expenses minus closing stock. This will be equivalent to net sales minus gross loss, and if the profit is there, then net sales minus gross profit is your cost of goods sold. So here it is gross loss. It means cost of goods sold is higher than cost of goods sold is higher than net sales. Higher than which amount? Gross loss. So net sales is given in the questions. Sales minus sales return. Net sales means what? Net sales means sales minus sales return. Sales return. Here sales return and return inward both are same. Sales return and return inward both are same. So sales minus return inward. Sales given in the question is 3,60,000 and return inward is 5,000. Return inward means sales return. So net sales is 3,55,000 is the net sales. So write the net sales over here, 3,55,000, and add the gross loss on it. Gross loss is 20,000. Gross loss is 20,000. So cost of goods sold is 3,75,000. This is the cost of goods sold, 3,75,000 in rupees. I have expressed in terms of rupees. Next, what we have to calculate? Closing stock. We have to calculate the closing stock. You know the formula of cost of goods sold. Cost of goods sold is equal to opening stock. Yes, opening stock plus net purchase plus what? Net purchase. Purchase minus purchase outward, return outward. Net purchase. Purchase minus purchase return. Purchase return is also known as return outward. Plus direct expense. Here the direct expense is freight inward. Freight inward is direct expense. Freight inward. Freight outward will be indirect expense. So freight inward. So per opening stock plus net purchase plus freight inward minus closing stock. Closing stock is our cost of goods sold. So opening stock given in the question, opening stock is 38,000. Okay. Net purchase you calculate. Net purchase means net purchase is equal to what? Net purchase is equal to purchase minus return outward. Outward means purchase return. Return outwards. So purchase given in the question is, purchase is 3,40,000 is the purchase and return outward is 4,000. So net purchase is 3,36,000 is the net purchase. So opening stock plus net purchase 3,36,000 plus freight inward. Freight inward is 26,000 is the freight inward minus closing stock. We have to calculate the closing stock. This is missing information. And cost of goods sold we have already calculated. 3,75,000 is the cost of goods sold. 3,75,000 is the cost of goods sold, what we have already calculated. Now you do the total of these three. Total of these three, 3,36,000, 38 and 26. Okay, 3,36,000 plus 38 plus 26. So total is 4 lakhs. It is 4 lakhs minus closing stock. Okay. So 3,75,000 cost of goods sold is equal to 4 lakhs minus closing stock. So closing stock is equal to 4 lakhs. This will be shifted this side minus 3,75,000. So closing stock is how much? 25,000 is the closing stock. 25,000 in terms of rupees. You express in terms of rupees. Closing stock is 25,000. Is it clear? Closing stock is 25,000. This figure 25,000 is the closing stock. This one, closing stock 25,000. Okay, 25,000 is the closing stock. Is it clear? This one 25,000 is closing stock. And we will express in rupees. 4 lakh minus 3,75,000. After gross profit, next profit is operating profit. What is operating profit? From gross profit, if you deduct the operating expenses, then you will get the operating profit. Operating profit is equal to operating profit is equal to gross profit. From gross profit you deduct operating expenses. From gross profit, if you deduct the operating expenses, then it's a operating profit. Question is, what is operating expenses? Question is, what is operating expenses? Operating expenses means office and administrative expenses plus selling and distribution expenses. Selling and distribution expenses is called operating expense. Selling and distribution expenses is called operating expenses. Office and administrative plus selling and distribution expenses called operating. So from gross profit, if we deduct the operating expenses, we'll get the operating profit. From net profit side also we calculate the operating profit from net profit side. Operating profit from the net profit side. Operating profit is equal to, here I have calculated from the gross profit side. If the net profit is given, you know that to calculate the net profit we deduct all expenses. So now we will revert. What we will do in net profit, we will add, what we will add? Non-operating expenses. And losses will be added back, which is deducted. While calculating the net profit, this is deducted. Non-operating expenses and losses is deducted. Now you add back. And minus non-operating incomes and gains. Non-operating incomes and gains you deducted. Incomes and gains. Then you will get the operating profit. From gross profit side, the gross profit minus operating expenses, and the same when we are going to calculate from the net profit side, then net profit plus non-operating expenses and losses we have to revert back and deduct the non-operating incomes and gains which is already added while calculating the net profit, then we will deduct it. Then we will get the operating profit. Okay. So see one question based on operating profit. Question is, calculate operating profit from the following. Here the net profit is given in this question. Net profit is given. Here from this side information is from this side. Here in this question information is from this side. So net profit is how much? Net profit is 5 lakh. This is given in the question. What other things are given in the question? We have to see non-operating expenses and losses we have to add back, and non-operating incomes and gains we have to deduct. So non-operating incomes are non-operating incomes, non-operating incomes and gains are what? Non-operating incomes and gains are dividend received. It's a non-operating income. Dividend received. It is not an operating profit. It's a non-operating income. Other is what? Non-operating income is rent received. Rent received is non-operating income. Rent received is also a non-operating income. So dividend received is how much? Dividend received is 6,000 plus rent received is 24,000. So it is 30,000. 30,000 is the non-operating incomes and gains. Similarly, we will calculate the non-operating expenses and losses. Non-operating expenses and losses. What are those non-operating expenses and losses in this question? Loss on sale of furniture, loss on sale of furniture, it's a non-operating loss, okay, plus loss by fire, it's a non-operating loss. Loss by fire, what is it? It is non-operating loss. This is non-operating loss, this is also non-operating loss. Salary is operating expenses, this we are not going to take. Interest on loan plus interest on bank loan, what we are paying, it's a financial charges. So this is a non-operating expenses. Financial charges is non-operating expenses. Another non-operating expenses is donation. Donation is also non-operating expenses. So loss on sale of furniture is 6,000 plus loss on sale of furniture is 12,000 plus loss by fire 50,000, loss by fire 50, interest on long term, interest on bank loan is 10,000 plus donation is 5,100 is the donation. Donation and interest on bank loan is non-operating expenses, and non-operating losses is loss on sale of furniture and loss by fire. So total is how much? 62, 72, 70, 60, 72, 77,100, 5,100, 77,100. So what we will do, non-operating expenses and losses we will add it 77,100, and we will deduct non-operating incomes and gains, that is 30,000. We will deduct it. So it is 5,77,100 minus 30,000 minus 30,000. So 5,47,100 is our operating profit. 5,47,000 is our. Coming to the next questions, short question. Calculate gross profit and cost of goods sold from the following informations. So information is net sales and gross profit is 40% of sales. So what we have to calculate? Gross profit and cost of goods sold. So in question it is given net sales is given. Net sales is given in the question. Net sales is rupees 8 lakhs is the net sales. Okay, and gross profit is 40% on sales. So gross profit is equal to what? Gross profit is equal to sales is 8 lakhs. So 40% of 8 lakhs is the gross profit. So it is 3,20,000 is the gross profit. Okay, 3,20,000. Now cost of goods sold is equal to what? Sales, net sales minus gross profit. So net sales is 8 lakhs and your gross profit is 3,20,000. So difference is 4,80,000 is the cost of goods sold. This is in rupees. I express in terms of rupees. Okay, in terms of rupees, 4,80,000 is the gross profit. That's it. Okay. Now see the another questions. One more questions. Next question is, calculate gross profit and cost of goods sold from the following informations. Net sales 9 lakhs. Net sales is given 9 lakhs. Okay. And gross profit is 20% on, here the information is given on cost, 20% on cost. 20% on cost. Gross profit percentage is 20% on which? Cost. And the information is given sales. So let's assume, suppose cost means cost of goods sold. Cost means cost of goods sold is suppose 100. It is 100. Then as per that, GP is how much? GP is 20% on cost, 20% on cost, 20% on cost. Cost is 100. So GP, it means GP is, gross profit is 20 rupees. Okay. So cost of goods sold, cost means cost of goods sold. Cost here means cost of goods sold I am talking about. So cost of goods sold plus GP is called net sales. It is called net sales. So when the net sales is 1,20,000, GP is how much? GP is 20 rupees. So we can calculate the GP. GP is equal to, gross profit is equal to 20 upon 120. When the net sales is 120, GP is 20 rupees. When net sales is 1, GP will be 20 upon 120. When the net sales is 9 lakhs, then what we'll do? When the net sales is 9 lakhs, then 20 upon 120 into 9 lakhs. Yes, this is simple mathematics. So that's why we applied the same thing over here. GP is equal to 20 upon 120. When the net sales is 120, GP is 20. When net sales is 9 lakhs, GP is how much? So GP is 1,50,000 is the GP. GP is 1,50,000. Now net sales is 9 lakhs and GP is 1 lakh 50, then cost of goods sold is 7 lakh 50. Cost of goods sold is how much? 7 lakh 50,000 is the cost of goods sold. Is it clear?